What is going on, everybody? It is TG. Guys, it has been a while since our last video, over a month ago. Guys, life is crazy, crazy busy. So I apologize for not making a lot of videos, this past couple of months. But, I'm going to try to get back into it. Summer's coming around, so it'll be a little bit less busy per se, and I'll have a little bit more time. Winter's super, super busy. But I want to talk to you guys about Netflix and Facebook, because Netflix just had their earnings quarter, and the stock got absolutely obliterated, down just over 40% at one point, and is now down 39% in the past 5 days alone. I want to talk about that. I want to talk about Facebook stock as well. That's another stock that's down over 11% in just 2 days. Why, you may ask? Well, Facebook and Netflix are a little bit different. People are anticipating that Netflix earnings are kind of projecting what's going to happen to Facebook. Now, if you look at the entire market recently, the entire market has obviously done pretty bad. The NASDAQ is down, a whopping, over 15.5%, since this year. So that's a pretty big drop. And I really wanted to talk about, what's really going to happen. And we break down Netflix, and, we saw Bill Ackman today dumped his position for a $400 million loss. And the question is, based on these earnings that Netflix just had, is it a good buy? Is it a good potential long-term buy? And we're going to go over that. We're going to go over Facebook as well. I actually picked up a lot of Facebook, yesterday. Unfortunately, it fell another 4-5% today, but I picked up a little bit more. And I'm bullish. I believe in it long-term. I think that, these stocks have become incredibly cheap. You look at Netflix, Netflix is trading at a 19 PE right now. In the past year, it's down about 60%. Facebook, you look at it, Facebook in the past year is about down 37%, PE of 13 before this earnings quarter coming up. So after the earnings quarter, probably going to be significantly lower than that as well. And again, it's a company that, a lot of institutions buy, a lot of institutions hold, a lot of big investors, Kevin O'Leary, the Shark Tank guy, CNBC contributor. He continues to talk about, he keeps loading up on it. He bought before the earnings, he bought after the earnings, he's buying even more. He believes in Facebook, he believes in the metaverse, and he believes that it will be a big deal. But we break down Netflix's earnings. They were actually pretty solid. Earnings per share, $3.53 versus estimates of $2.98. That's a big beat. Revenue missed by a little bit. But the big issue was their net subscribers. They lost 200,000 compared with 2.73 million. They were expected to add 2.73 million, and they lost 200,000. Because of them cutting off services in Russia. I have no idea why they would. The people of Russia are not responsible for the war, but, they will attack them anyways. And, that's why they lost 700,000 subscribers. And so, you're talking about a company that is losing a lot of subscribers. They need to grow, and yet they do something like this. It shows foolishness, in my opinion. I don't agree with that. You also have the issue with password sharing. Netflix estimates that 100 million households are sharing passwords, and they suggested that a crackdown is coming. If they do this crackdown, they're going to lose a lot more subscribers. They're going to try to retain about 25%, they said, of that 100 million, try to get about 25 million new subscribers from cracking down on the password sharing. But again, we'll see. There's so much competition out there. You got Hulu, Disney Plus, HBO Max, some of these other weird ones I don't even know that are not that big, but they still have subscribers. Apple TV Plus or Apple Plus, that's another one as well. They won an Academy Award picture. And then of course you have Facebook, that's in a little bit of a different boat. It's the social media king on Instagram and stuff like that. And the stock's been taking a massive hit. This stock is down to one. This stock is at 190 now. That's incredible. It's almost at its 52-week low right now. And it just continues. It's almost in the 180s now. We just talked about it when it was 191, and it's already dropped over 0.5% in just a couple of seconds. I don't know if the entire market's dropping. It looks like it is. The NASDAQ's down another 0.4% now. But again, another day, starts up 202 and then drops over 6%. No one wants to hold a stock right now, with the exception of maybe Apple, which has been showing some strength today. And it's crazy to see these numbers and to see some of these stocks have just gotten beaten down so badly. But again, we'll have to see what happens. I just need Meta, Facebook, over 185 in the next couple of weeks, and I will profit on my credit spreads. I didn't want to just buy the underlying asset, or I definitely don't want to buy calls, because when we have runs and just massive drops like this, people just continuing to sell over and over and over. I wanted to, even if it misses earnings and it just or beats earnings but doesn't move much, I still want to be able to profit from that. So we'll see how it is. Again, I can roll out if I have to. I don't want to. I'd like it to stay where it is or go up. But again, we'll see. It's been a rough couple of months for tech investors, especially in some of these high multiple ones. Again, year to date down 43% for Facebook. Year to date down 64% for Netflix. These are cheap stocks now. You look at a PE of 13. That is a cheap stock. Okay, for big growth as well. Revenue is growing 20% year over year. That's pretty big for a company, especially with a lot on the horizon. Like the metaverse, the reason they're not making as much profit, I mean, 10 billion is still a good profit. It's good profit margins, but the reason they're not making as much profit per se is because they're investing a lot into the metaverse, and they think that could be a big winner one day. Maybe it will, maybe it won't. I think it'll be something. I definitely think it could be big. I think it is not taken into consideration the valuation of the company, and maybe it should. So again, we'll have to see on that. Netflix is a different case. While I do think it's a very attractive valuation here at just an under 20 PE ratio, that has been beaten down so much, and earnings are growing. The question you have to ask now is like, okay, is it worth? I mean, wow, it's actually really shooting up now. Is it worth getting into at this price? And is there going to be a rebound, or is it going to be like Facebook had after their earnings, where it was a multiple week decline? I mean, we look at their earnings. Right here, it initially crashed to like, what is this? 237. Then it crashed even more to like 200, and now it's at 190. And so it was a multiple week decline. Will we see that same thing with when Meta reports earnings? I mean, this is almost in the 180s right now. So again, we'll have to see what happens. But overall, I think I'm pretty bullish on Facebook. Obviously, I own some. And I definitely think tech stocks are going to rebound. Nasdaq, again, has been beaten down very, very badly these past 6 months. Down from its high of, just about 17%. That's a pretty big pullback, especially when you see some of these earnings growth these companies have had. So, while some investors are dumping, I've seen a lot of people on CNBC talk about why they're dumping their Netflix position. I don't think it's the time to sell here. I think this is actually the time to sell puts here. If I had the capital, obviously I don't, I'd be selling a 200 strike price put. And if I get assigned at 200, okay, I'm fine doing that. Facebook, same thing. I'd be selling puts at 200 or 190 now, I guess, since it fell a little bit more. And if you get assigned shares there, take the shares and get paid the premium for it. But I think to sell here is a little foolish, especially with how much everything has fallen. Again, it's one thing if markets are at all-time highs. They're not even close. I mean, we're down 17% in the NASDAQ. The S&P is not down as much, but even that's still down a little over 7% from highs. So again, we'll see what happens, but I think this will be a buying opportunity for those that are patient and can hold. But again, you have to be willing to take some beatings like we're seeing today in some of these stocks like Facebook and Netflix. So again, we'll see what happens to everything, but overall, I think that the earnings quarters are going to be good. I mean, we saw Tesla had a really good earnings report, and their stock's up over 6.5% today because of it. So, if the earnings are good, the stock will go up, hopefully. And we're hoping that Apple does the same next week. I have a lot of Apple and Google. I hope those are going to do good, because we have a lot in them and we can profit big. I mean, look at Apple still at 169, 170. Google's under 2,500. I mean, this thing has been absolutely beaten down recently. Down 7% in the past month, 11% in the past 6 months. Year to date, down 12.5%. It's still up for the 1 year, but only by 10%. And this company has grown so much. I mean, we're talking about 35% growth in this company. So again, we'll see what happens. I'm probably most bullish on Alphabet out of all stocks, in my opinion. But again, we'll just have to see what happens. But anyways, guys, thank you so much for watching. I hope you guys enjoyed this video. If you do, hit that like and subscribe button. It means a ton to me. But glad to be back and hopefully making some more videos in the future. So enjoy your day, and I will talk to you next video. Take it easy, guys. Bye.